You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldanoilguy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim. Always a pleasure.
You were saying off-air, gold, it appears to be close to a bottom, which means good times ahead for gold?
I think we're getting darn close. You know, we've been waiting 5 years for this bear market in gold and silver, along with the miners, you know, to end. And so many people have tried picking the bottom. And, you know, on a technical standpoint, we're still in a downtrend, but we're starting to see the market breadth, the overall health of that sector for gold, silver, and miners. We're starting to see that actually come to life. We're seeing more mining stocks form bullish patterns. And this doesn't mean that market is going to take off and go right away. This is like an early indicator that things are firming up, that a bottom is getting put into place. Just like what we saw in the equities market over the last about 12 months. We've seen the overall stock market deteriorating, the internals, everything was deteriorating, yet stock markets continued to rise until there's enough deterioration that the market collapses, which is what we saw in August. Well, when there's a bear market somewhere, there's usually a bull market somewhere else. And I think gold and silver and miners are going to be one of the next major bull markets that's going to start up as soon as, you know, only really a couple months we could be into a full-blown bull market in precious metals. But we're still seeing those internals for that sector just starting to strengthen. We still might be a couple months away before things really firm up and we actually see big money starting to move into that sector and support it. And we need this downward bias, this downward trend to kind of move to the upside. So the trend is favorable. So people start wanting to buy pullbacks as opposed to them what they're doing right now, which are selling any rally. Every rally gets sold into. But everything is starting to show that the tides are turning for gold. The tide looks as though it's about to come up. And the equities market, the tide is going down. There's a lot of weakness in the overall equities market.
When you said precious metals, what about palladium and platinum? And I'm, you know, referring this back to the Volkswagen crisis because if people buy fewer diesels but more gasoline vehicles mean more demand for palladium.
Yeah, potentially. Well, palladium and platinum have done really well in the last little while. Huge V-shaped bottoms, very strong moves to the upside. They've both kind of run right into a key resistance level. If you were to look way back a couple of years on a monthly chart, they've both kind of rallied straight up the last more or less 4 or 5 weeks. They hit a key resistance zone, a pivot area in the market, and they've reversed straight back down this week, kind of giving back a good chunk of those gains. But there's some serious money that was moved into those metals, and we're seeing some pretty good strength. And I think we're going to start to see precious metals as a basket really kind of do fairly well going forward. And there's an ETF called, the symbol is GLTR, and it holds a basket of gold, silver, palladium, platinum, all those things. So you can actually kind of get the benefit of all those, because you hate to just own one, and you own silver. So many people are huge into silver. Silver stackers are crazy. They're buying it hand over fist for the last couple of years. But how do you know silver is going to be the big mover? You know, if everybody's piling into it, you know, why won't gold be? Gold is what countries are really stockpiling and building up. And you can store more money with less amount of storage because it's heavier, it's worth more, all those things. So you hate to load up with one metal. This ETF gives you a basket, different weightings of each, but you can hold all the metals for one simple trade and position. It's a great way to put a good chunk, I think, of your money for precious metals into a nice basket. So you've got a bit of everything, because you never know which metal is going to explode, and it's usually the one you didn't expect.
Are institutions investing in precious metals?
There are certain, there's a lot going on of, are they investing? Are they manipulating? It seems like JP Morgan, you hear this over and over again, how they're driving the price down, selling paper silver, but they're accumulating massive amounts of physical. There's different markets that you can do that in. it seems as though something huge is brewing, and it does seem like it is brewing for silver. Mind you, you never know how that'll react. I think there's big potential on silver because it does move fast on a percentage basis. But I still think gold is one of the key currencies. You see all these countries accumulating gold, and it just seems to be the better store of value. It's more or less, it just seems to be the store of value for big, big money, not so much physical silver. Although silver's starting to pick up some serious demand. And of course the silver bars and rounds and coins are sold out across the web. We had the recent pullback a couple of weeks ago in silver, and everybody sold out. You go online and every store is sold out. You got to wait a month or two for silver. So there's huge demand for it. And the big banks are accumulating massive amounts of silver and gold. So there's something brewing. Obviously the paper, I think the manipulation in the precious metals, the paper selling is driving the prices down, and I think some of these big countries and institutions are accumulating at a discounted price, artificially, discounted price. When they let things go, there's going to be a big unwinding, and depending what happens with currencies and the financial market, depending if things crack and break, we could see gold, rally to $10,000, $12,000. Some people are saying $25,000 an ounce gold. And, you're talking $1,500 an ounce silver. So there's some pretty crazy stuff going on out there, but those are pretty serious extremes. And you need the financial system to crack and break drastically for that to happen, which I don't think will happen, but I think things could get very ugly, and we could see, $400 or $500 silver. We could see $4,000 or $5,000 gold. So
we'll have more with Chris Vermeulen right after the break.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Chris Vermeulen. His website is thegoldanoilguy.com. Chris, what is happening with crude oil right now?
Crude oil, last time we spoke, crude oil was trading in this tight little formation. We saw a bullish formation form. It was called a bull flag or a bullish pennant. And we saw that pattern form. And unfortunately, the way the charts seem to work out is usually you want momentum on your side. When something moves up, usually it'll only pause for a few days, and then you'll see that upward momentum continue. People are aggressively buying. They don't want to miss the boat. And what we saw in crude oil in late August, we saw everybody pile into crude oil, big short covering rally, and then it paused and traded sideways for a couple weeks. And it had a little bit of a pop, and it traded sideways for a few more weeks. And all that upward momentum has been lost. And the last time we spoke, price had worked its way into the apex of this little pennant formation, and I spoke about how when the price gets into the apex, it means there's no decision, there's no real strength behind it. The market can be easily manipulated, and is really hard to find out to know if a breakout in either direction is going to be real. And we saw a strong pop in the last week or so in crude oil, just enough to bring it to a new multi-month high. And then yesterday and today we're seeing big selling step in and push price right back down. It looks as though it's in a range here where it's just going to get shoved around by the big money, try and shake up traders until eventually the big money can see real demand or real selling, and then they're going to pile on with the trend. Right now it is trendless, very tough to trade, and I think it's going to chatter sideways here for possibly several more weeks or even a couple more months, down between this $38 and $50 per barrel area. It's a big range, I know, but that's kind of the range that I think we're going to see it just oscillate through randomly. Not easy to trade.
What's happening on the bond market?
Bonds are looking as though I think we could see a pretty big move in bonds. There's a lot of concerns about the bond bubble kind of popping and, potential defaults and all that stuff going on. But in the short-term basis, I think we could see bonds when the U.S. equities market starts to really roll over, which I think may not come until January. Once that starts to roll over, we're going to see money rotate into bonds. People are going to become scared. We're going to see bond prices shoot up, especially the short-term bonds. The SHY is an ETF for the 1 to 3 year Treasury bond. And that ETF is moving very similar to what we saw in the second half of 2006 2007, right into that market top. We're seeing that same type of price action in short-term bonds. People are expecting a 1 to 2 year kind of crash in equities, and they're kind of loading up and preparing with short-term bonds. And that's kind of what I'm positioned for myself. I own a lot of short-term bonds with long-term investment money, expecting a 6, 12, 18, maybe even 24-month bear market. And we're going to see these bonds, both long-term and short-term, rise in value. But I think there's going to be a much quicker move up in short-term bonds. And when the bear market is coming to an end, when there's real serious fear in the market, that's when you see the long-term bonds actually make up most of their gains. So what I'm looking at, short-term bonds now for, 6, 8, 10 months, and then more or less rotating probably into longer-term bonds to catch a big the second kind of move up there in a different kind of bond. And then eventually that'll be the bottom of the bear market. Who knows when that'll happen, but as that starts to take place, move out of bonds and rotate back into equities when they're paying higher dividends and all those things. The market's been cleansed with a lot of the downside already out. So that's kind of my game plan going forward.
What if some major country brings in quantitative easing again?
That is very likely. It could happen, and you know what? That would spur on equities. The only thing is I think there's a lot of there's been a lot of selling going on in equities. It really depends how it's implemented, what country it is, how much. Obviously, quantitative easing will help lift the equities market. But at this point, it looks as though the tide has turned enough that I think that will create a short-term pop in price. And again, it really depends on what country and how much it is, if it'll be enough to kick the U.S. market back into a bull market or not. And at this point, I think it'll help add a little bit of strength, and that could carry it through until January if we do get something like that. But then I think we're going to see a rollover and into the go to the downside. Again, we got to take it pretty much day or week by week because things always, new events unfold, and you have to reanalyze all the time.
Chris, thanks a lot for chatting with us.
Hey, appreciate it, Jim. Take care.
My guest has been Chris Vermeulen. His website is thegoldanoilguy.com. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Comments for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.